Hello everyone, in this video we are going to learn a new concept in income tax, which is capital and revenue expenditures. So in general term, what you first directly you are moving on to capital expenditure. Let us know about what you mean by expenses or an expenditure. Expenses are nothing but a cost incurred at the time of purchasing or doing something. Finally, an expense is nothing but it is a cost incurred for something, which an activity done by the company or at the time of purchase or at the time of paying salary, kind of those activities. Any event on transactions, cost incurred at the time of any event. Okay, so what do you mean by capital expenditures? See, generally in these concept capital and revenue expenditures, most of the time we will be doing in financial accounting. Okay, but in income tax also we are having a major role for this. We are not going to deeply solve 12 mark questions on capital and revenue expenditures. In 12 marks questions, 1 or 2 points will be come from this point. They might state any one statement saying that a building purchase for so and so. So there is a cost incurred for that. Whether we are going to identify that expenditures is capital in nature or revenue in nature. Generally, a capital and revenue expenditures always have different accounting treatment. So capital expenditures always will be reflected in the balance sheet, whereas revenue expenditure will be always we are going to reflect it in, or we are going to show in P&L account. The same way in income tax also it is having different treatment. So we are going to identify those kind of how we are going to treat the capital expenditures. So first let us know about the meaning. Capital expenses are funds used by the company to acquire, upgrade and maintain physical assets such as property, plant, building, technology or an equipment. So capital expenditure is often used to undertake a new project or investment by a company. See, any fund in the sense nothing but cost we can say, or capital expenditures are the amount incurred also we can write. So the term we can use the different term, but basic sense of the capital expenditure meaning should be remain same. So what are the expenditures we are going to incur for long term process? No, that one we are going to identify as a capital expenditures. So maintaining an asset or purchasing a new asset for the company, or when we are going to start a new project at the time of a new project or production units, no, that time the company will incur lump sum expenses. Not only like lump sum expenses, main important thing is here, whenever an expenditure is incurred for the company, if that is used for a long run and non-recurring in nature, and also those expenses is going to give some revenue for you, means these things we are going to identify. If those things are there, means we are going to identify that expenses as a capital expenditure. First point, long term. Second one, like non-recurring in the sense non-repetitive. So once in a while, for example 2 years once or 3-4 years once, those expenses is going to occur. Sometimes it may not be occur also. Okay, and important, there should be a indirect source for income. For example, I would like to say, if you are going to purchase a plant and machinery, so daily or weekly basis we are not going to purchase machinery, isn't it? So whenever the company is going to purchase a plant and machinery, minimum it would come for more than 5 years or 10 years, isn't it? So long term, and we are not going to purchase a plant and machinery in repetitive nature. So it is a non-recurring. Through this plant and machinery, I'm going to earn, or I'm going to produce my products, and I'm going to sell. Due to that, I'm going to earn profit, isn't it? This is the indirect source of plant and machinery is a expenditure. Yes, obviously. Why I'm incurring that expenses? Because in order to produce my source of income, so it is an indirect source for income. So next important point to be remembered, capital expenditure is a payment for goods or services recorded or capitalized on the balance sheet instead of expenses on the income statement. Yes, obviously, most of the capital expenditures are in asset. So we are going to write those expenses. We are going to show those expenses in the balance sheet only, not in the P&L account or in any income related statement. Okay, capital expenditure spending is important for the company to maintain existing property and equipment and invest in new technology and use other asset for growth. Why capital expenditure is very much important for the company means, in order to maintain the production level, in order to maintain the technological upgradation. If you are using the old methods means, old technology means, the company can't face the competition outside the world, isn't it? They have to keep on changing. If the technology changes mean, even they have to upgrade it. At least one or two machinery they have to purchase a new machineries for the purpose of production, in order to get number of products more, no? So that's why, in order to keep we have to keep running in the competition. If you use old technologies, if you are thinking that if I reduce some expenditures in if I save some amount in buying a second hand machinery means, your production level will be down, isn't it? If you purchased a new machinery means for costing 10 lakh on an average, I'm telling, it will be having life more than 10 years, isn't it? If in order to reduce cost for particular 1 year or 1.5 year, you are purchased a old machinery costing 4 lakh, but the life of machinery only 5 years. See, 10 years or more, here only 4 years that machinery is going to run. During this period also, it may take more maintenance expenses. Maintenance and repair expenses will be coming. So whenever we are going to purchase a new machinery, the maintenance and repair charges will be less comparatively, and long run it will work. Okay, so these are the things. If an item has useful life less than 1 year, it must be expensed on the income statement rather than the capitalized. So whatever the things you are going to mention in whenever you are going to identify the expenditures as a capital or revenue, whatever it may be, you have to make sure that those capital expenditures should be more than 1 year. The useful of life should not be less than an year. If it is less than an year, definitely we are going to identify those expenses as the revenue expenses. Why I am giving very much important for this concept means, for your 12 marks or 15 marks questions, no, you will be having any one or two statement relating to capital and revenue. We can't predict. If you don't know what is a capital expenditure, what is a revenue expenditure, if some statement is given means, you will don't know what you are going to do with those expenditures. For example, if you are calculating business income means, okay, so in business income concept, profit or gain from business or profession, we are having a separate unit, isn't it? In that, while calculating 15 marks, in adjustment they will mention the company purchased a building costing 5 lakh, they will give. Okay, what did the company purchased a building costing 5 lakh. So life of building and all, they may give, they may not be giving. So building is an asset, isn't it? So whenever an asset is being purchased, this should not be included in the P&L account, where we have to reflect this amount. In balance sheet we have to reflect it, isn't it? But wrongly what they will do, they might be included this building amount in the P&L account sometimes. So what we supposed to do, exclude this amount from P&L account. This work we have to calculate it. If you don't know this is an capital expenditure, then what you will do? Just tell me what we will be doing then. We just simply ignore this and we are going to move on with the problem, and the entire problem will be wrong. Whenever we are studying a small things in income tax, it will giving a big impact in your 12 marks. We can't ignore any of the concept in the IT. You should always learn all the theoretical concept, then only you'll get good score in practical. Okay, so even in agricultural income also, even in capital and revenue expenditures also, you should be very careful with these kind of statements. Okay, so next they have given certain expenditures. See, facility, factory including upgradation and expansion, vehicles, manufacturing equipment, computer, furnitures, they have given. These are the few basic examples of capital expenditures. Okay, hope you understood what you mean by expenditures. Then we have different types of expenditures. In that, capital expenditure is a very important concept. Even in accounting, financial accounting also, we'll be having these kind of statements. So be aware of this and identify it. One thing you have to have that in mind: capital expenses or income should be recorded in balance sheet, and revenue should be in income statement, that is P&L account. You should not forget this. Okay, then only we can easily solve the problems. Okay, next thing, revenue expenses. So same way, before directly going to revenue expenses, we should know the meaning of expenses. So revenue expenditures are short-term expenses used for current period or typically within 1 year. So same opposite to the capital expenditures, here revenue expenses are the nothing but expenses incurred during the current financial year, or those expenses which used for the day-to-day activities of the business. In simple term, if you want to identify those means expenses which is incurred at the time of business activities or used to, revenue expenditures are those expenditures used to maintain day-to-day activities, or we can write it as revenue expenditures are those expenses incurred at the time of day-to-day activities of the business. For example, see, typically within a year, for current financial year, what are the expenditures that a company has been occurred. So revenue, next line, you see the next line, revenue expenditures include those expenses required to meet ongoing operational activities, nothing but ongoing operational cost for running a business, and thus are essential the same as operating expenses. So those expenditures which is very recurring nature, here it is going to support the business activities by meeting the short term expenses of the company. We are going to pay the salaries to the employees, and raw material purchased, wages paid, maintenance, then advertisement, commission to the salesman. So these kind of the expenses which gives a support to the income, but here how we can say it gives us a priority of the expenses, then only the regular activities of the business will run. If you're getting my point, if you are not paying salary to your employees means they won't work efficiently, isn't it? If you are not paying contract amount to your supplier means definitely he will not send the product, raw materials that you are required, isn't it? So revenue expenditures are those expenses which are required to run a daily business. Okay, so here you should know that revenue expenditures are recurring in nature, especially weekly, monthly or quarterly it is going to recur. Okay, next thing, it is short term, not a long term. Short term means less than 1 year. Okay, so it is going to occur less than 1 year. Then it is also a support to the source of income. Next, they have given few examples for the revenue expenditures: salaries and wages, any overheads, office, even depreciation also revenue expenditures, research and development cost, rent, business travel, that is transportation allowances. These kind of things are considered as revenue expenditure. Okay, if you have any doubts, kindly comment in the comment section, so will be solve it. Okay, so this is about the capital and revenue expenditures. So next, let's see what are the difference between capital and revenue expenditures. Okay, yes, here they have given. In next slide we'll see what are the difference between capital and revenue expenditure. Before that, let us know the accounting treatment of revenue expenditures. So revenue expenditures or operating expenses are recorded in the income statement, and these expenses are subtracted from the revenue that the company is being generated from sales, eventually arrive at the net income or the profit for the particular period. So here, as I said earlier, capital expenditures always will be in balance sheet. Revenue expenses will be, we are going to reflect it from reflected in P&L statement. If it is a direct expenses, will show in trading account. If it is an indirect expenses mean will be showing in P&L account. If you are doing income statement means definitely under expenses we are going to show all the revenue expenditures and we are going to deduct it from gross profit. Okay, so after deducting these expenses we are going to identify net profit of the company, obviously. So why I'm going to explain the difference between revenue and capital expenditures are here means, maybe for 5 marks there is a chance 1% or can't say 1% also, 0.01% chance is there. They might ask for 2 marks, or they might ask for 5 or 6 marks question, they might ask this. So the difference between, obviously always we are going to start with the definition, meaning we are going to start. So expenditures incurred for acquiring assets to enhance the capacity of the existing asset. Here the expenses incurred for maintaining day-to-day activities of the business. So tenure, it is a long-term tenure, it is a short-term tenure. These are the features of the expenditures. Okay. Next, value addition, enhance the value of an existing asset. It does not enhance the value of any asset. It is going to maintain the asset and incur day-to-day expenditures of the company. Next, physical appearance. It has a physical appearance except for the intangible asset. If you have purchased a plant and machinery means definitely we are going to install that in our factory, so that we are going to see and we can touch that. So physical appearance is there. But for revenue expenditures, maintenance and repairs, or else wages paid, rent paid, these are the expenditures. Physical appearance will not be there. We might give cash only. They have done our services, that's it, right? So I'm using a space, for that reason I'm going to pay the fees. So there is no physical appearance in the revenue expenditures. Occurrence, it is recurring in nature and recurring in nature. These things already I have explained you in earlier statements. Okay. So there are other few differences are there. I think you don't want this. Only few things is enough. So this is about the capital and revenue expenditures difference between. So here they have given few rules for determining the capital expenditures. Okay, so the first rule is expenditures incurred for acquiring land and building or fixed asset, we can simply say. So any expenses that is incurred for the particular purpose, that is for the purchase of any asset, means we are going to identify as a capital expenditure. Next, incurred for putting an old asset in working condition. For example, they have given a old machine is purchased for 10,000 and 2,000 is spent for repairs and installation, and the total expenditure are capital expenditure. Here this 2,000 is included in the cost of machinery, because at the time of purchase it is incurred expenses. Now that's a reason. Okay. Third point, expenses incurred on existing asset which result in improvement and extension of the business activity by increasing the earning capacity or decreasing the cost of production. For example, installation of machine, addition to the building or plan. For example, if you are having a 2-floor building, means if you are going to construct one more floor, means, or if you are going to add one more room, or you are going to extend some places, means those things are also identified as a capital expenditures. Okay. Next, when the benefit of expenses not fully consumed in one period, spread over several periods. For example, expenditure made for massive advertisement. Massive advertisements means we are going to give the large scale advertisement for the business activities. Next, last point, expenses which increases the earning capacity in a way of fixed asset can be called as capital expenditures. For example, amount spent on cinema theater for air conditioner. So I'm going to change the infrastructure of the company. That infrastructure is going to increase the reputation of the business. It's going to how to say that, it is going to attract my customers, and they are going to satisfy with my infrastructure facilities. These things will be done in the theaters, malls, in supermarkets and all, definitely they will change the places and they are going to attract the customers through that. Okay, so last one, yes, expenditure spent on capital required for earning profit, for example underwriting, brokerages. So capital, raising the capital requirement for the company at the time of IPO issuing also, no, we are going to pay amount to the underwriters at particular time. Those expenditures are known as capital expenditures. So these are the major capital expenditures of the companies. Almost everything is being included. Yes. So cost of land and building, cost of lease on hold, again cost of machinery or purchase of furniture and fixtures, preliminary expenses we have patent, trademark, goodwill, and the cost of invention, increasing in capacity of the asset. And next they have given features of revenue expenditures, but these features we have already read in difference between, no, again don't need to repeat this. Okay, so recurring in nature, arise at the time, arise from trading activities, amount spent on revenue expenditures. Next, period of benefit from revenue expenditure is limited. Okay, so next rule to determine the revenue expenditures. On what basis we are going to identify the certain expenses as a revenue? Routine expenses, recurring in nature, maintenance of fixed assets, and consumable items. So these are the three rules, or we can say it as three things we are going to identify. Whether the statement belongs to any one of this means we are going to identify those expenses as an revenue expenditures. Okay, revenue expenditures will be reflected in, yes, P&L account. Got it? So these are the things. Next important, we studied about capital and revenue expenditure, isn't it? So we have more concepts saying capital and revenue gains we have, and capital and revenue receipt we have. So these two concepts will learn in later videos. So if we learn everything at the same times, it will be get confused also. So first let us clearly understand the capital and revenue expenditure first, then we'll move on to capital gain, later to capital receipt. Okay, so no need to mix everything in a single video, and we don't want to rush into the concept. Slowly, clearly we have to learn the concept. Okay, if you know these concept means, if you know easily, if you understood the capital expenditure concept means, it is very easy for you to know the capital receipt, because it is the opposite of the capital expenditure, isn't it? So wherever I have mentioned expenditure, if you are going to mention it as an income or a receipt means, or revenue means, that is the meaning of capital receipt. Okay, if you are going to identify capital expenditures, we are going to write the revenue expenses in the debit side, expenses as, right, revenue receipt will be identified in the credit side. Simple as that. Okay, so easy concept only, but I don't want to mix the things. I don't want you people to get any confusions, so I'm going to end this video. I think you have understood the capital and revenue expenditures meaning and difference between the capital and revenue expenditures, and basic concept of the basic rules how we are going to determine the expenditures. So these are the concept of capital and revenue expenditures. So if you have any doubt, means kindly comment in the comment section. Definitely I'll try to solve your doubts.